Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown. It's 8:18, so CPI will probably come out while we're doing this. I'm going to try and move quickly. That was the home page. Today's topic, Bank of America loves the silver confirmed. From two perspectives, we're going to be touching on that. The first perspective is fundamentally, Bank of America put out a report about a week ago, and while the headline was gold, the real story was silver. And technically, their technician has gotten extremely aggressive on silver, and we want to touch on that a little bit because it's something we haven't heard anywhere else, and we kind of ascribe to it. All right, there's the home page. You can read that while I'm doing the prices. 10-year yields are up to the dollar is 99 and change, down a little bit. The SP 500 is 60.30, down 4. The VIX unchanged. Gold up 15.16. Silver at 36.19, down 35. Copper also near its lows, 476, down 8. WTI up over $1.30. Natural gas 342, up 6 cents. Bitcoin down 1,000. Palladium up 11. Platinum continues to scream, 1270 up 63. Gold, silver a little bit higher today. Grains are all up, and yada, yada, yada. You can see that. I want to get through a couple things here. Context of those prices I just said. Donald Trump just released this statement. Our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me. We're getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention to this matter. All right. You see the statement, you see the markets. The markets don't think anything materially was done. I'm not saying the markets are right. I'm saying the markets buying gold and selling silver, just look at that pairing, are saying whatever has gone down, nothing is truly resolved. Now, that's the way you look at it and take it as a macro analyst. As a flow trader, you say, well, silver's run up, over 10% in the last week, and gold has been unchanged. So, from a flow trader's point of view, it's like, buy the rumor, sell the news, no big deal. The markets are looking good, and this is a little bit of a hangover, expecting this news to come out. So those are the two takes on it. There's the macro analyst, oh, the market doesn't like it. And then there's the flow traders, like the market loves it. And this is just a pullback, a healthy pullback. From an academic point of view, I'd like to I'd like to voice an opinion on the Chinese student thing. Folks, it doesn't matter. Okay, that's for us. In 2022, as a professor at UConn MBA, my student mix, about 30 students, would be 10%, this was MBA, 10% full-timer Chinese students, 10, not 10%, one third, I should say, 10 of them, one third Indian and other subcontinent students, and one third Americans. That was my mix. Last year, before this whole thing started, it was one half American students, one half Indian subcontinent, and one Chinese student. Noticing the mix, I went to the dean and I said, hey, what's going on? And he echoed back to me on the conversation that we had. And that conversation was, well, trade barriers are going to be going up soon, and Chinese nationals are no longer in a patriotic duty, no longer sending their students to the US. And so we're not able to pull them. They were going out trying to get Chinese students. They're like, they're not coming here anymore. They're going somewhere else where they're not going. However, India is fine. So they pulled more Indian students. So this is before the tariff thing came to a head. And now Chinese students are permitted. Chinese students were never not permitted. It's money. We want to make the money. China has already stopped sending students before this happened. Okay. So while that's not important, economically to this statement here, it's important to know that what's framed as a victory is already a done deal. It's just not happening. You don't go there if they don't want you there anymore. And that's what's been going on. That's important to me because if you look at that and you expand it out, most of what you read is bullshit. Framing victories as losses, framing losses as victories, things like that. Now, I'm not saying that this economic deal isn't done. It certainly does seem it. And I believe it based on how it's being phrased here. I want you to notice the most important thing, just reading between the lines, the most important thing to America is cars, rare earths, electric vehicles. If you shut down the automotive industry on EV or cars in general, on a key supply like rare earths, well, then our economy goes to shit in 6 months. And their economy will go to shit too, because of the cyclical or circular reinforcement of it. So that's the most important thing, and that's truly very good. I'm going to throw this at you. I don't think that was the most important thing to China. They gave us what we wanted, but they're going to get what they want going forward. They don't do favors, they collect debts. That's how they do things over there. Very practical. Okay, so let's get to the story. That was big news. It just came out, and it's 8:25, so CPI will be coming out in a little bit. Oh, gold is rallying on CPI expectations, so maybe people think it's going to come in a little hot. All right, here we go. Fundamentally speaking about silver, the worst is over. That's our title. Bank of America has raised its metals forecast, calling for $40 silver and 4,000 gold by late 2025 or early 2026. While gold continues to dominate headlines, analysts at BOA are increasingly focused on silver, not just for its monetary appeal, but for its irreplaceable role in industrial production. There's the story we sent out a couple days ago. Silver on the edge. This is June 3rd. Bank of America says silver to $40 in 2025. And that was a chart we showed the initial breakout. Now, a relevant quote from, I forget the guy's name. I'll pull it up there in a second. Right now, industrial activity is going to be weaker. So that's one of the reasons silver has lagged. But we think the squeeze on demand will be short-lived. And that was a very prophetic statement. Blanche, I think his name was, because the case that they were making was silver has hung tough despite projections of silver demand industrially dropping. Recession, solar panels, less solar panels being bought. And when you think about it, yeah, silver really lagged for months going into the gold rally, starting in November of last year through, let's say, April this year. But now, from January through now, silver's outperformed. So I think the market is now starting to discount a rosy outlook industrially, be it from tariffs, be it from rate cuts, be it from the globe in general. So a more optimistic outlook. So I think that's a really good point that silver may have disappointed you, but that's in your head. But the reality is silver has done well despite the lack of demand. Technically speaking, there's a nested cup and handle that we just broke out of. Now, this is new to me. Everyone talks about the 40-year cup and handle. It's more like a soup tureen and a ladle hanging off of it. But anyway, let me read a little bit of what we noted from their report that we said. This was sent to founders because it's a huge technical report and it has all the markets in it. But we're going to break out the silver for you here. Silver prices broke out to the upside in the first week of June, confirming a 10-year cup, not the 40-year, a 10-year cup and handle formation. The breakout surpassed the initial technical target of 36 and aligns with concurrent strength in platinum markets. And there's that report for founders. Again, we have the silver chart for you. This is them talking. The next levels of resistance lie at the previous spike high of 37.47 and the psychological round number of $40 per ounce. However, this is the part that kind of threw me off. Nobody gets this black and white. But apparently this guy does. However, the scale of the weekly and monthly bases indicates potential for a more extended move. We agree. A test of the 2011 highs near $50 remains in play as both positioning and momentum indicators show no signs of exhaustion. And that the link for that continues there. We're going to show you a chart describing that, our chart, and we'll include his chart with all the bells and whistles at the bottom in the premium section. But we'll come back to that in a second. Let me get through the other stuff. Related posts, we put out 10 stories yesterday, four of which were on platinum and silver, maybe five. But here are the ones that made the cut today. Tariff CPI makes an appearance today. It's 8:29. Thomas Massey introduces a bill to audit America's gold reserves. It's not going to happen, but the bill is going to be a big headline. Platinum, forgotten, not gone. That's our headline. It sucks as a headline, but it's a really good story because it breaks down what's happened. Platinum longs got out, shorts got in, and then the market took off. Very interesting market. And then there's the founders version of that, the Goldman Sachs traders on platinum going forward. They believe 1,300. And then at 1,300, you really have to watch because there's a lot of options there. And the sooner it gets above 1,300, the faster it'll go to whatever's next. And then here's a news reporting version of the platinum facts, as paraphrasing Bloomberg there. Platinum extends surge to highest since 2021 as the market tightens. And then silver the last 30 days post. You can see all that. All those stories are there. Coming soon this week, end of the COMEX era, gold repricing, the rise of physical markets. A think piece that we've had in the hopper, but it's been just too busy with metals. And the post-COVID world and how everything changed. That was a lecture we gave in 2022, discussing this with those very same students, one third, one third, one third. And we think it's probably important to revisit that because the economic engine of the world changed and how it's just really coming back. BRICS versus G7, et cetera, et cetera. More of a think piece than anything else. It's 8:30 and gold is up 24. So where's the dollar? Let's take a guess here. The dollar's down 27. Silver's rallying off the lows. And bond yields are down. That should be benign inflation. Well, you could see the data. Let's go right to that. So it should be benign inflation. Yep. So inflation comes in softer than expected, 0.1 month over month versus 0.2 expectations. And that's actually kind of big. There's the chart. It's actually kind of big because the CPI analysis going into this number had been this. CPI should be weak, but we think the tariff effect is going to start inching into the market. And the fact that it came in soft should give Powell room to cut, or at least the marketplace to think Powell's going to cut. So that will be bullish for gold. They might cut. That will be bullish for silver. They might cut. That will be bullish for bonds. It should be bullish for stocks. It should be very bullish for stocks. Let's see what they're doing. There's a monthly. Let's go to that's crazy monthly chart, right? So the daily is up, but not screaming. And that kind of makes sense. A muted reaction to the upside for stocks because they had an amazing run up since April, as you can see on the screen. Okay. Where were we? All right. So here's our version of the Bank of America chart. This is going back to 2012. So the smile of the cup starts in 2013. It's late 2012, early 2013, January 2013. All right. And that's when the market gave up the ghost on that ledge after the sell-off from $50, $52, $50. And then boom. So we're going to suggest to you that this formation is more robust than the 40-year cup of handle that people talk about. And it's more robust because the handle didn't drop as low as it could have. Now, depending on how you draw things. Within the handle part, you'll see these three little, that's an inverted head and shoulders. So the cup and handle of this formation implies $42 to $46. The head and shoulders formation implies $38. Now, that may not be of any help to you now with the market trading, 36, 37. But It's something that we talked about with people when the market first got above. We're looking at a measured move situation here, and although I'm not swearing by it yet, I am seeing that, let's just say, 37.50 should not be a problem in the next 2 weeks, knock on wood, right? $40 is going to be an afterthought after we get there and reject it the first time. And then $50 should be in the offing. Again, that's subject to three factors in the market right now. The first one, the one that will come back that isn't going anymore, is tariffs. An increase in tariffs makes silver go up because people front run the tariff, right? A decrease in tariffs makes silver go up relative to gold, but not necessarily go up, right? So tariffs make silver go up initially. No tariffs make gold go down. So you have to look at it like a three-dimensional, like a crack spread almost. Um, the other driver is every economy in the world is lowering rates except for the US. If the US lowers rates, silver will probably explode. So, and the third driver is, and I think this is the important driver for how we got here from there over the last 2 weeks, and that is every bank in some way, shape, or form had been selling silver and buying gold, or selling silver and buying copper. Every CTA had done it. Many prop desks had done it because gold is a pure play and copper is a pure play and silver is neither. So let's keep selling it. And as they started to cover their silver, what did they do? They sold platinum because there are traders out there who do not like to use the firm's money. So they're always doing carry trades, sell silver to buy gold, sell platinum to buy silver. Next they'll be selling Pokemon to buy platinum. I don't know what's left. Palladium, that's going to go up their ass as well. So that's a situation. The question is, will this morph into a higher market? I think yes, but you never know. So I'm just going with the technicals now, right? I would be a buyer of pullbacks that did not violate in silver $28, $29. I'm less likely to buy a pullback this time because it's already tested that several times. But the market looks good. I'm not worried about, oh, look, silver's down a penny now and gold's up 37. So let's pull that up. We'll pull up an hourly, give you a little bit of chart porn. Okay, so here you have Trump going out saying the tariffs, good news, right? So silver starts the day weak because people are playing their games again, and now they're all getting bitten in the ass. So if the market gets above 36.62 after 9:30, if the market is above 36.62 after 9:30, I would not be surprised if the market traded 37 today. Crazy, right? Let's look at platinum. Platinum nowhere, meaning it hasn't reacted to the number. Yeah. Platinum 1273 is probably a better buy than silver 3700. Okay, so I think platinum gets above 1273. It'll be a magnet to 1300, and then we see what happens. I'm Vince. Have a great day.